The situation is not pretty at all. The altcoins are crashing. Bitcoin went down by a quarter in the last 6 weeks. And so people are talking about a potential bear market. Was this the top? Now, I've been betting on falling prices for quite a while, and that's based on two back tests: the 44-day simple moving average and the 125-day simple moving average. So those charts here show buying and holding in white and the back tested result in turquoise. And because of that result, I've been betting on falling prices since the end of October. And so the idea is that we want to be rather following the trend. Whenever the price is above the moving averages, we bet on rising prices. Whenever the price is below, we bet on falling prices. And in order to turn bullish again, we had to rally quite a bit. We'd had to see a V-shaped recovery all the way above 108K, potentially even 113K. Now, why is this sell-off even possible? We see all of that accumulation by the treasury companies led by Michael Saylor's strategy. We also see long-term purchases through the ETFs. So why can we suddenly see such a drop? And is this potentially a buying opportunity? Are maybe the ETFs going to buy this dip and support the price? In the end, it's all about buying low and selling high. And obviously, we aren't as high today as we were just a few weeks ago. Now, the problem is that the long-term holders are still selling. This is the long-term holder supply net position change. And since Bitcoin hit the 110K mark, the long-term holders are just selling. And that selling is a much more significant effect compared to the purchases by the ETFs. Because have a look at that comparison. Again, the long-term holder supply change, that's this time in blue, and the ETF change, that's in green. So really, the long-term holders, they decide the medium-term price action. They decide when a rally stops, that's when they are selling. They decide when a dip stops dipping and turns around, that's when they are buying. So this is really where the future of the crypto market lies. Are the long-term holders reducing their selling? Are they potentially even net buying the dip as they did in September of last year, or as they even did in May of this year? The main problem is that it's the OGs, the wallets that haven't moved their Bitcoin for the last 7 years. They have a very low average cost basis, around $1,000 and less, and they are offloading at a quicker and quicker rate. Now, the big question is, why is this selling going on? Has the long-term picture for Bitcoin really changed that much? Is there something that is different now compared to a few years ago? And the answer is yes, maybe. This is the entire cryptocurrency market cap divided by the Nasdaq 100. So how is crypto doing relative to tech stocks? The comparison is relevant because both assets tend to trade with liquidity flows, as in when the market wants to get risk on, they're buying tech, but also crypto. When the market is more fearful, both assets tend to get sold off. Now, this ratio is important because it shows us how much the additional risk of crypto gets compensated. The answer is it's really not that great. So over the last 8 years, the cryptocurrencies on average outperformed tech stocks by 24%. So that's roughly 3% per year, but that's at the expense of seeing massive volatility of 80% plus bear markets. And so is that risk really worth the potential outperformance? And if you continue to go down, will there even be any outperformance over the last 7 years? That's maybe what the long-term holders are currently thinking. That's maybe why they are offloading. Just have a look at Bitcoin in comparison to the Nasdaq 100. They tend to bottom at the same time. So this was the COVID crash. They also tend to top at the same time. Again, here is the bottom. At the same time, here's another bottom. At the same time, the two assets move in the same direction at the same time. They are competing for the same spot in a portfolio. There's no diversification benefit in owning both Bitcoin and technology stocks, at least in terms of price movements. And so tech just returns the same for less volatility. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. And there's then even a bigger story. Again, now this time we've got Bitcoin at the bottom. At the top, we've got the Nasdaq 100 relative to the money supply. The problem is that Bitcoin really has only been trading since the Nasdaq 100 appreciated. So the first block of Bitcoin was mined in January of 2009 at the height of the global financial crisis. And we've never seen a dot-com bubble crash. We've never seen something like the global financial crisis. Bitcoin has always existed during times of appreciating risk on assets. And if we're really in an AI bubble, if the artificial intelligence stocks are going down, the Nasdaq 100 crashes, what's going to happen with Bitcoin? History suggests that it's likely going to come down as well. If crypto doesn't have any more long-term outperformance versus other risk on assets, but it does have all of that volatility, then as a result, we should only buy whenever volatility is in our favor, as in when we are historically cheap. In other words, we might only want to buy when Bitcoin is below the historical average cost basis, which currently is at 56K. So in the past, it was always the best to buy whenever the average market participant was in losses. Right now, on average, people are still in profit. There's still some way to go down. And that's maybe why we're seeing all of that selling pressure. But again, I hold my strong opinions loosely. In other words, if the long-term holders start buying this dip, the rally might continue for longer. I also want to see money flowing into the market again, right? The stablecoin market cap has to expand. There have been periods in the past of roughly 2 months in length where the stablecoin market cap just went sideways. We are now halfway through that. If we don't see any more money flowing into the crypto space until end of the year, we might have a confirmed bear market at our hands again. There is one major reason to potentially buy this dip, and that is that people are already extremely scared. This is now the stablecoin dominance. How much of all of crypto is currently in stablecoins? And in the last 2 years, we tended to trade in a range between 5% and 9%. And there is inverse correlation here. So whenever the stablecoin dominance is high, we tend to be quite low in crypto prices. What we see at the bottom, that's the crypto market cap. So currently, we a lot of dry powder on the side. Currently, it might make sense to buy the bottom. But again, this is only true if the overarching trend of long-term holder selling stops and if money flows into the market again. Otherwise, we might see a breakout from this trend from the last 24 months. We have seen historically levels of stablecoin dominance at around 16-17%. And then of course it makes sense to buy in very heavily. So it's really a matter of the time horizon. Short term, we are oversold. We can also see this through the extension from the 44-day simple moving average. So whenever we drop comparatively quickly, we might see a bounce. In case we fall further though, and a lot of data points towards that, then a price level of $50,000 per Bitcoin is very much a possibility. Again, that's only slightly below the realized price. And every single time we went quite a bit below that realized price at the end of a bear market. In other words, if you have been betting on falling prices already for quite a while because you followed this channel, then it might make sense to close some of that hedging because we are short-term oversold. But if you're still betting on rising prices, if you still have a lot of risk exposure and your time horizon is longer, it might make sense to cut some exposure. Because again, the situation is very risky. The long-term holders do have a reason to sell. Crypto isn't as attractive of an investment as it used to be, and risk on assets are historically extremely high. Thanks for watching. Feel free to check out the premium membership, thebitcointrader.com. A link should also pop up on the screen right now on the right. Just click on that. It will lead you to the website explaining what kind of positions I currently take in this market. See you next time on YouTube or see you in premium. Bye-bye.